All right, listen carefully, because the stocks we're talking about today are not your typical safe, boring blue chip plays. These are penny stocks trading under $1, and I'm talking about the kind of stocks Wall Street ignores until they suddenly explode. Small cap companies with the potential for 5x, 7x, even 10x returns if the right catalyst hits. The crazy thing about penny stocks is that when a stock trades at 20 cents, 40 cents, or 60 cents, it doesn't need a massive move to double in price. It only needs attention, volume, and momentum. That's why high-risk investors constantly watch these small caps, looking for the next breakout before the crowd notices them. Before we jump in, understand this clearly. I am not a financial advisor, and this is not financial advice. Penny stocks are extremely volatile. You can make a lot of money very quickly, but you can also lose money just as fast. Smart investors never blindly throw money into one stock. They build positions carefully, manage risk, monitor catalysts, and stay disciplined. These are not safe retirement investments. These are aggressive, high-risk, high-reward opportunities that require patience, research, and timing. The first stock to watch is CYCU, a company operating in the cybersecurity sector. Cybersecurity is becoming one of the most important industries in the world because governments, banks, hospitals, and corporations all need protection from cyber attacks. CYCU trades around the low penny stock range, which means its market cap is tiny compared to the massive cybersecurity industry. If the company lands a major government contract, strategic partnership, or shows strong revenue growth, the stock could move aggressively. In penny stocks, volume creates momentum, and momentum creates explosive price action. The second stock is BNAI, a digital media and emerging technology company. We are living in a content-driven economy where streaming, AI-powered personalization, and digital engagement continue to grow rapidly. BNAI trades well under $1, which makes it attractive to speculative investors looking for turnaround opportunities. If the company improves revenues, signs major partnerships, or becomes compliant for exchange upgrades, institutional investors could begin paying attention. When institutional money enters small caps, liquidity increases, momentum builds, and price spikes can happen very fast. The third stock is LPTX, a biotech penny stock focused on oncology and therapeutic development. Biotech stocks are extremely volatile, but they can also deliver some of the biggest returns in the market. Everything depends on catalysts like clinical trial data, FDA updates, partnerships, and drug development progress. If LPTX releases positive trial results or secures funding from pharmaceutical partners, the company's valuation could change overnight. That's why biotech penny stocks sometimes jump 5x or even 10x within a short period of time. At the end of the day, not every penny stock under $1 is a hidden gem. Some companies struggle with debt, dilution, poor management, or weak financials. That's why smart investors focus on stocks with real catalysts, growing industries, and improving fundamentals. CYCU gives exposure to cybersecurity. BNAI targets digital media and technology growth, while LPTX offers biotech upside tied to clinical milestones. You don't need every stock to succeed. Sometimes one major winner can offset multiple losses and still generate massive overall returns. In the world of penny stocks, timing changes everything. So stay informed, stay disciplined, and stay ready for the next breakout.